Good morning. It's Thursday, the 26th of February, 2015. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quick rundown of the news as always. ECB's Draghi, excuse me, said yesterday that he sees first signs of confidence in the economy and positive effects from new measures. Outlook's more positive than a few months ago. Monetary policy cannot create growth on its own, reaffirms that QE will continue until there's a sustained adjustment in the inflation outlook. This morning on CNBC, Fed's Bullard comes out and reiterates that the Fed should remove the word patient from its statement in March. Initial claims came in at 313 versus 290 estimated, so slightly worse. Continuing claims 2.4 versus 2.39, almost in line. At the same time, durable goods orders came in at 2.8% versus 1.6%, much better. And durables ex transportation at 0.3 versus 0.5%, slightly worse. January CPI month on month came in worse at negative 0.7% versus negative 0.6%. CPI ex food and energy is at 0.2% versus 0.1% estimated. We saw a reaction in the treasuries as a result of that CPI release. We saw also the S&P drop to new lows. Again, CNBC, we have Fed's Bullard. The most recent comments that slightly higher than expected core CPI reading should bolster view inflation will move back towards target. So he's picking on the positive and ignores the fact that the comprehensive CPI is at negative 0.7% versus negative 0.6%. Looking ahead at 9:30 today, 9:30 Central, EIA natural gas storage change is expected. The number's negative 236 billion. At 10 o'clock, we have Kansas City Fed manufacturing activity expecting 3.0. And then this evening at 5:30 Central, we have the Japanese jobless rate, CPI, and then also the Japanese industrial production at 5:50 and retail sales at 5:50. But pay attention to the jobless rate and the CPI if you're trading any pair with a yen in it. For as far as speakers today, we have at 11:30 we have BOE speaker. Looks like, oh, that's not important. 12:15 Central, we have Fed speaker Fisher. The non-voting hawk speaks at Imperial College of London. And then at 12:30 Central, we have ECB speaker Lind. Leaning Dove speaks in Madrid. That's what's on deck for today. Let's look at the charts and see what we've done yesterday and what we might expect for today. So yesterday, for those who attended the Trader Bite, the expectation is for, since one-time framing has resumed once it broke lower, one-time framing up, the expectation yesterday is for a responsive test higher early, and then I expected it to move down towards 108, 2108.75 value low. This is the value low of Tuesday. It's also the LVN from Tuesday, and the old high here at 2108.75 from last Friday. So the expectation, that was the first target on the primary hypothesis, which is for a rotation down. The expectation is that the market will likely pull back yesterday and start to reach for lower prices to reconfigure and to reassess and search for buyers. Let me readjust my OS here from yesterday. And what it ended up doing is that we had responsive buying on the open, just like we expected. We had responsive buying on the open, and then everything looked great on the rotation. Really nice setup here. Nice scale at 2108.75 on the dot right here, this LVN. And then from there on out, it just seemed to kind of sit sideways, unable to push lower. As soon as it started to break above the open, that hypothesis had to be on hold, had to be put on hold, and we ended up with new highs, 2117.75. If you recall yesterday, I brought up that the next measured move higher was 2117.50. We took it out by a tick, and then we immediately found sellers all the way back down to 2109.75. And then for the rest of the day, we ended up going neutral on the day and finishing in the middle. So yesterday was a normal neutral day, fairly balanced profile. The key LVN above is 2115, no key LVN below. Again, balanced profile, so the value area is in play. Overall, the market kind of did a little bit of both. It did a little bit of hypo 1 here early with a stop, and then did hypo 2 up to the 2117.50 measured move by a tick, which was beautiful. I was not able to take advantage of that, unfortunately. I was just late to the game. And then from there on out, it went neutral and put hypo 1 into play again. As I mentioned yesterday, the key target below is 2091, 2099, 2099.75, and 2091 below are the keys right here. This is the key LVN at 2099.75, key composite LVN, and then the if once we break back into this balance that we've got here, this bounce area you see dotted in red, once we break in, then the expectation is to test this LVN 2099.75, as I just said, and then after that to test the most valuable price, which is 2091. But there are multiple high volume nodes here at 96, 93.75, and then 91. So we expect chop in this zone here. But yesterday seemed to set up for a pretty good rotation down and end up being neutral, not neutral extreme, but neutral. And then this morning, we've just been basically in range and sideways until the CPI and jobless claims numbers here. Very bulky profile, a poor high left behind at 1450, 1475. And then we're trading near lows. I'm going to tell you that it's very difficult this morning to be able to tell which side has a higher probability of playing out early. I don't have a primary hypo for today. The expectation for today is likely to be responsive buying early, and then for the market to basically chop around and balance. I still expect us to rotate down, so I would be pretty reserved on a day trading basis. In the day trading time frame, I'd be pretty reserved about the extent to which I would push my targets on the long side or the short side. But I think it's, in my opinion, given the way it's traded here, we have a lower point of control. We do have a higher high, higher low, but value is in line with prior day with a lower point of control. This is going into balance. The market rarely ever goes from trend up to trend down or trend down to trend up, although recently we've seen more of that. Generally, the market goes trend up, balance, lower points of control, and then basically buyers get exhausted, or we spend all the buying energy, we expend it, and then all you're left with is sellers, and then it starts to explode downwards. Maybe today, after this yesterday's bounce, maybe that's the day. Anyway, I might sound like I'm talking up the short side as if I have a short position. I do not. I'm flat. I have no positions. But all I'm saying is be careful, because these are the kinds of conditions where we've seen the market having to advertise lower prices, meaning trend down, in order to find buyers to match up with the orders it has to sell. So I would be cautious on any bullishness at this point. I would not overstay any long positions, but at the same time, I don't see a clear case for selling other than the fact that we are topping out and we're starting to look like we're likely to move lower. So we'll see. I'm not married to any particular position. I don't have a primary hypo here, other than to say that we are in balance and we're likely to chop around with a responsive buying spree on the open to 21.1150 before the market decides. This is another day, just like yesterday. We have to wait and see who dominates, then step in and take our positions from there. There's always a pullback to trade against. There's always a pullback to trade against, no matter what trend you define, what time frame you define. There's always something to fade and play, as opposed to going with a breakout. So just be patient and be alert, and the market's likely to tip its hand at some point. Good luck. And there's not much I can cover with the Euro stocks. Euro stocks have gone into balance here, as you saw yesterday. This is what we expected. We expected balance in this area. And it's doing exactly what we expect here. Go into balance at this high volume, composite high volume node, and then the expectation is for it to rotate down. The point of control has moved up to 35.25 when I include yesterday. So that's the first target down. Second target, 34.96, 34.98 would be the next target down. So if I pull this back to this balance zone, you'll see that the next key area below is 34.87. But for now, it's just balancing out and it's chopping around like it normally should or would in a high volume node. Okay, I'll leave you with that. Good luck. I hope that you're finding these videos useful. I'll keep doing them, and as long as there's an audience, and I hope it's changing the way you view the market and the way you prep for the day. Good luck.